Welcome to today's market outlook. Let's dive into the key updates and insights to help you navigate the markets effectively. Dollar index is currently at 106.1 and uptrend above the 50 and the 100-day exponential moving averages, but facing some resistance on the shorter time frames. Seasonally, December is not a good month for the dollar as we have witnessed in the past decade. It justifies the resistance. However, Trump's comments on the BRICS nation of raising tariffs up to 100% as they try to replace the USD alongside views on pausing the rate cuts are keeping the DXY strong against all major currencies. Therefore, it is not at all advisable at the current moment to short the dollar against any of the currencies. Key levels to watch out for are 105.5, below which it breaks the trend channel and can see further down moves. The 50-day EMA is at 104.37 and the 100-day EMA is at 103.71. It clearly shows the uptrend in the DXY. Key events to watch out for are the ISM Services PMI, non-farm payroll data, and the Fed's chairman's speech in the current week. Moving on to crude oil, crude is currently trading at 68.32 USD, and it has been interesting to watch as it is consolidating in a zone of 66 to 75 US dollars from the past 2 months and has entered into a long-term apex on the charts. A long-term apex means that a break on either side can see a very strong move on the given side. A long trade can be taken with stops below the strong support zones of 66.3 USD with a target of 71.7 US dollars. US and China's manufacturing activity rising above expectations in the last month signals a stronger global energy demand, which supports the positive outlook for crude oil. The Cakes and Manufacturing Index data came in at 51.5 against the market consensus of 50.5, which showcases positive signs for crude as well. So, yes, a long trade can be taken, but the stops must be adhered to. If we talk about gold, gold has been quite choppy in the past 2 weeks, especially after the elections. It is currently trading at 2639, and the 50-day EMA is that which is the 50-day EMA that is at 2639. An obvious longer-term uptrend can be seen with the 100 EMA at 2576. The US 2-year and 10-year bond yields have cooled off quite a bit from its highs, and the 10-year yields are just above the 2-year yields, and there's a high chance of an inverted yield curve. An inverted yield curve would simply mean that weaker longer term outlook is being portrayed by the economy. Therefore, gold is a good directional buy if it falls below 2620 with a stop at 2570 just below the 100-day EMA and targets above 2750, which can be trailed to the 100-day EMA as it keeps on rising. USD yen is another interesting pair to watch out for. It has seen quite a strong down move in the past week. It is currently trading at 149.813 and has drastically fallen from its previous high of 156.745. It has broken below its 50-day EMA of 151.310 and 100-day EMA of 150.775, while also breaking below the trend channel at 151.1, showcasing a clear downtrend in the shorter term. December, being a weak month for the dollar, has also accentuated the downtrend to a certain extent. And as we all know, USD JPY is a proxy for the bond yields. The fall in bond yields has also substantially caused the down moves in the USD JPY. A tight long trade can be taken at current levels with a tight stop at 148.9. This is a contrarian trade, but an up move could potentially offer an attractive risk reward with targets of 152.5 if the dollar strength continues. The non-farm payroll data is a key event to look out for this week and will help decide the course of action for the upcoming sessions. Thank you. Moving on to Euro USD, I'm personally watching the Euro USD very closely, and it can be a great directional trade with expectations of the euro dropping below parity, that is dropping below 100. It is currently trading at 1.0488, and one can look to enter a short position at current levels with stops below 1.0570 while adding on to the position in between these levels. This is only a trade for directional traders and is likely to take 3 to 6 months to play out. Importantly, the positive swap on a short Euro USD position makes it a position that can be held with some additional benefits. It is currently at a key support zone of 1.0491 and a short trade can be entered at these levels. Moreover, the strong US economic reforms by Trump's activities to benefit from techno-colonialism and Europe's tedious regulations that hamper innovation makes it fundamentally positive for the USD against the euro. Furthermore, the forecasts on the Fed pausing rate cuts at 4.5% currently And the ECB's cash rate, which is currently at 3.25%, 3.25%, being cut by 50 basis points, makes the interest rate differential significant at 1.75%, which further accentuates the USD's strength against the euro. The ECB has a monetary policy meeting on the 12th of December, which will be influential on its future prices depending upon the rate cut decisions, whether it is 25 basis points or 50 basis points. Well, thank you so much. That wraps up today's analysis. Remember, successful trading hinges on probabilities and risk management, not endless possibilities or unrealistic expectations. Stay disciplined and focused. Wishing you all the best for your trades from the team at BCR. Thank you.